If you have student loans, the next 30 days are not the time to coast. July 1st is a transition point, and transitions are where people lose money, lose clarity, and lose control, not because they are careless, but because they are busy. Most borrowers do one of two things: they panic or they ignore it and hope nothing changes. Neither strategy works. A better strategy is to use the next 30 days to become decision ready. So if your payment changes, your budget doesn't break. In this video, I'll give you a practical 30-day action plan, the key questions to ask, and a simple framework to protect your cash flow without guesswork. But first, can I ask if you would be so kind as to subscribe to our channel? Our algorithms show that more people are watching than subscribing, so please subscribe. It helps us reach more people. Here's the trap. Even if you keep making payments, you can still be operating with outdated assumptions. You might be paying the right amount for last quarter, but not for what is coming next. And when assumptions change, your monthly plan can drift fast. So before we talk tactics, anchor on this. This is not about fear. This is about financial operating discipline. Your goal is to move from reactive to prepared. If your plan relies on auto pay and crossed fingers, it is not a plan. A real plan answers three things: what might change? How exposed is my monthly cash flow? What action do I need to take before deadlines? Before you open a spreadsheet or call your servicer, ask these three questions. Question one: what repayment plan am I actually on today? And why did I choose it? Many people cannot answer this clearly. If you cannot name your current structure, you cannot evaluate whether it still fits. Question two: if my payment amount increases, where does that money come from each month? Not in theory, in your actual budget. Question three: if my timeline or forgiveness assumptions shift, does my broader strategy still hold up? That includes emergency savings, business reinvestment, household goals, and other debt. These three questions force clarity before emotion takes over. Week one is a data week. Log into your loan servicer account and document current balance, interest rates, current repayment plan, monthly payment amount, next due date, any notices or pending account messages. Then confirm your contact and notification settings. You do not want to miss a notice because alerts are going to an old email. Also, write down your top three concerns in plain language. For example, I'm worried my payment will jump too high. I'm not sure my current plan is still optimal. I don't know which deadline applies to my account. Clarity starts with organized facts. Week two is scenario week. Build a simple monthly cash flow view with these categories: income, fixed costs, variable costs, debt payments, remaining free cash. Now model two cases. Case A: your payment stays close to current levels. Case B: your payment increases meaningfully. The goal is not perfect prediction. The goal is to know in advance how much room you actually have. If case B creates strain, choose one adjustment now. Trim a discretionary category. Delay a non-urgent purchase. Resequence another financial goal. What matters is that you choose deliberately before pressure arrives. Prepared beats surprised. Week three is decision week. This is where you prepare to talk with your servicer or advisor from a position of structure. Create a written question sheet and bring it to every call. Use questions like, what specific changes apply to my exact repayment plan? When do those changes take effect on my account? What action is required from me and by what deadline? If I switch plans, what is the expected monthly impact? What assumptions am I currently making that may no longer be valid? And here is a critical habit. At the end of every call, repeat back what you heard and ask for confirmation. To confirm, my next required action is X by date Y, correct? That one sentence prevents expensive misunderstandings. Week four is execution week. Take required actions before deadlines, then verify each one. Checklist: confirm payment amount and next due date. Verify auto pay settings and account routing. Save confirmation numbers or written receipts. Update your household 90-day cash flow plan. Do not stop at submission. Always verify what actually posted to your account. Then set one follow-up review date 30 days later. Why? Because good financial decisions are not one-time events, they are operating rhythms. A follow-up review helps you catch drift early before it becomes a problem. Let's quickly cover common errors. Mistake 1, waiting for certainty before acting. You do not need perfect certainty to prepare your budget. Mistake 2, treating payment changes in isolation. Student loans affect your full cash flow system, not just one line item. Mistake 3, using vague assumptions. I think it will be fine is not a strategy. Mistake 4, entering calls unprepared. If your questions are not written down, clarity gets lost. Mistake 5, forgetting follow through. Execution without verification creates hidden risk. Avoid these and you immediately raise your decision quality. A strong 30-day plan is simple and disciplined. It includes clean account facts, 2 cash flow scenarios, a documented question list, confirmed actions and deadlines, a 30-day follow-up review. Notice what is missing: panic, hype, and guesswork. You do not need a complicated spreadsheet empire. You need a plan you can explain in 2 minutes and execute under real-life conditions. That is what creates stability. That is what protects optionality. And that is what helps you make better long-term decisions. If you want help pressure testing your student loan plan before July 1st, PEC can help you structure the decision clearly. We can walk through your cash flow scenarios, your key questions, and your execution checklist so you know your next step with confidence. Book a conversation with a personaleconomiccoach.com if you want a practical second set of eyes on your plan. This is a moment where preparation can save stress, protect liquidity, and improve decision quality. Educational disclaimer: this content is for educational purposes only and is not financial advice. Consult a qualified professional or call us before making financial decisions. Thanks for watching. See you in the next video.